Hey guys, Peter Harper, Managing Director and CEO of Asena Advisors. For those of you who are not familiar with the business, we're a multifamily office and we're advising foreign families and ultra high net worth private clients on US deals. So mergers and acquisitions and direct investment. So today I wanted to do my next check-in on the Grantor Trust series and focus in on section 675 of the Internal Revenue Code. So a recap, for those of you who aren't aware, the US has a anti-avoidance regime known as the Grantor Trust Rules that can result in foreign and domestic trusts that are generating income, attributing that income directly to the person that effectively settled the trust, whether they did that directly or indirectly through some form of capital contribution. A lot of our clients own forms of foreign discretionary trusts in other countries like Australia, New Zealand, and various offshore locations where they are commonly used not only as a family planning tool but as a form of business entity. And so anytime we're dealing with foreign families that are looking to make direct investments into the US and they hold their wealth inside a foreign discretionary trust, we encounter these rules. So section 675 is a particular provision that addresses the circumstances pursuant to which the powers of a trustee, so the powers vested in a trustee or indirectly in the grantor, will result in attribution. And they're specifically focused in on powers that are considered to be not taking place at market value, right, or market value consideration. So an example of that, if you look at the structure of most discretionary trust deeds, they'll have the provisions that set up the trust. They'll deal with distributions of income and capital and who's entitled to what, and then they'll have a set of provisions that deal with trustee powers. How the trustee can invest, whether they can make loans, conflicts of interest, self-dealing, all those type of things. And an example of a power that we regularly see that we think would breach this provision is the ability for the trustee to lend money on any terms to someone that would be classified as a grantor, or to sell or transact with respect to trust funds with a grantor at less than market value consideration. Again, which is very common, right? So mechanically, when you are looking at how is a foreign trust or a domestic trust classified for US tax purposes, you need to work through these series of provisions from 671 through 679, and each of these provisions are designed to deal with different scenarios. But it's 675 that's specifically designed to address what are viewed as non-market value consideration provisions within the specific trust powers of a deed, right? So if you're trying to assess how a foreign entity or a domestic entity is classified and you're concerned about the Grantor Trust provisions, 675 is the provision that you need to be concerned about as it pertains to trust powers. And if you want to learn more about this or get some feedback on whether you've got to worry about this for your trust, your foreign trust, please reach out to us. Cheers.